For years, Germany was known for its strict financial discipline, its so-called Schuldenbremse or debt brake. But that's changing fast. The government is now bypassing these rules to finance massive spending programs. 500 billion euros for infrastructure, defense and energy transformation. And who's buying all these bonds? Mostly institutional investors, banks and even foreign governments. But with rising interest rates, Germany will have to pay much more to borrow. But Germany isn't alone. Just look at the US. Debt is over 34 trillion and it's growing by trillions per year. Japan? Their debt to GDP rate is over 260%. And the only thing keeping the system together is the ultra low interest rates. But now they have a fight with inflation and they are forced to raise the interest rates. Even China, which was once a creditor nation, is now dealing with massive government and corporate debt. The big question is, how will these governments ever pay this back? The most common way? By inflating it away. Hello everyone and welcome back to my video. In today's video, I want to have a look with you at inflation. Is there really no way around it? Or do we actually don't have to be worried? Today, we have a look at the data and I will show you how you can protect yourself from this outcome. So stay excited, but before we jump into the charts, let's have a look at what promises some people made some years ago.
We also know that as our economy has come roaring back, we've seen some price increases. Some folks have raised worries that this could be a sign of persistent inflation, but that's not our view. Our experts believe, and the data shows, that most of the price increases we've seen were expected and are expected to be temporary.
And maybe you remember, he was not the only one. Europe said this.
From an ECB point of view, and I believe Commission point of view as well, because we concur on that front, we do believe that inflation numbers in 21, which we will see rising, are of a temporary nature.
So now we're here 3 years later and they take on record debts again. So we remember very clear what happens when you take such big debts and pump them into the economy. We've seen it at the pandemic and I think we will see it again now. So the question is, what does this actually mean and how can I protect my money from not getting hit by the next wave of inflation? Herefore, I want to show you some charts. So what you see here is the debt of GDP rate from 2019 until 2023. And it visualizes very strong how bad the problem is getting since the pandemic. Governments take more and more debt. They raise the rate higher and higher. And we say above 100, a country is under risk of financial destabilization. If we look at this chart, you can see how many countries are above 100%. And the problem is that the US, with one of the biggest economies, is part of this. Japan and Greece are leading the board, and Germany now decided to go over 90%, which means they are entering risky territory as well. So as we look at this picture, what you can see is very clear that $100 worth $100 by 1913. If we take the time until now, we are at 378. We had a lot of crises in between. We had the Wall Street crash. We had the Fed creation in 1913. We had in the Bretton Woods Agreement, oil crisis, second oil crisis, and so on and so forth. But in the end, it led it all in one direction, and that was that the dollar got devaluated. So what can happen is an inflation spiral. This can happen when they can't serve the debt anymore because the amount of debt is too high. So they need to take more money to pay the debt and the interest rates of the debt. And then you see what happens here. What you see in this picture is when we compare the Deutsche Mark to silver. Why am I picking up this? Because in the 1920s, we had this scenario in Germany and it led to a crisis with a hyperinflation. It went so far that actually to buy a piece of bread, you had to take a tray full of cash to go to the bakery because your cash didn't worth anything anymore. I know it's hard to imagine, but what if dollar bills serve only to make a fire and to not get cold? I don't want to have this scenario and I don't want to live in this scenario, but this is exactly what happened. So what happened is the value of 10 mark was one piece of silver, and then it skyrocketed to 1 billion in just 4 years. So that's a total devaluation of the currency. And this is the risk that everybody wants to avoid. We see this happening in certain countries. We see this in Argentina. We see this in Turkey. They fight with high inflations, and this really destabilized the whole economy. When we look at the S&P 500, you can see we had a really big run. If we take the 60s until now, we ran up 13.3,000%. But we just learned $100 only worth $3.73 after all this time. So what we're going to do is we divide the chart by the amount of money in supply. And what we get here is a completely different picture. I know you've been told every ETF is just going up. Just buy an ETF, you're going to make money. If you see this picture, you're going to say, what are you telling me? Like, we are not even on the levels of the 2000s. We're still below that. And we're not at 13,000%, we're at 223 since the 80s. And this changes the whole picture, and this is the problem that we have to fight with, because the amount of money is just getting raised so much that the devaluation of the currency devaluates our investment returns. So how can you protect yourself? I know this is the most important question, and I will get there very soon. This is one part of it, is gold. So you think, okay, gold has a limited supply, I can protect myself with gold. But if we look at gold divided by M2, the picture you get is this. And it doesn't look great at all. We had the 80s, and gold fell from the 80s until the 2000s about 88%. So you might ask yourself, why was that? Because money was being printed, people had to rescue themselves and to actually buy scarce asset like gold, right? Correct? But what happened is the trust into the economy was high. Also, in the 80s, we had an inflation rate above 15%. Gold doesn't bring a return in interest. So they said, okay, how do I protect my money if gold doesn't bring me interest and I don't know if gold is going up in value? So they put their money into other assets that brought them the return of 15%. Also, the trust in the economy and the government right after that was quite strong. Gold is an asset. People buy this when they disbelieve into the strength of the government and the reliance of them. You can see that 2000, with the dot-com bubble, we had the first big financial crisis. Then we had the next crisis in 2008. It's always when gold skyrocketed. Now we're having the next rise of gold, but we didn't have the crisis yet. So this is a pre-indicator that something is happening. And as I told you, with the rising inflation, it's very possible that we go to a bigger crisis than we ever can imagine with this money printing. That's why gold is rising right now. The problem is that you cannot use this as a guaranteed hedge, because if you look at it, you're still down 64%. And obviously, we are looking for an asset that brings us a benefit and not make us lose more money. So what about Bitcoin? You can see the percentage number is much higher here. It's ridiculous. I take it from 2014 because otherwise it's not really a chart to work with, because the rise of percent in the first years was just too high. So it's very hard to understand, okay, what actually happened there. If we divide it by the M2 money supply, it's the only asset. When you look at it, it's the only asset that was going higher even under recognizing the money supply. And it was massively outperforming. So that's why I say Bitcoin is important, because Bitcoin is scarce. We have 21 million Bitcoin and some of them are lost already. There will never be more Bitcoin than this. So this makes it unique in its purpose. And it's not controlled by any government. So nor the ECB, nor the Fed, none of them can just print around more Bitcoin. And since we have the same problem in all the countries worldwide, it's very possible that this could be the solution to protect your money. If we look at gold compared to Bitcoin, we're down 99.98%. So if you need a scarce asset to protect yourself, the clear answer here would be Bitcoin. But of course, we have no guarantee that Bitcoin is going to perform more like this. Based on the numbers that we have and seeing what the money supply worldwide is doing, the possibility is very high. So you have to take your own decisions because I can't give you any financial advice. Me, myself, I buy Bitcoin because I see a possibility to protect my money off the inflation. So take your decision, choose what you want to do, and let me know in the comments. Are you buying Bitcoin, or do you have any other asset that we should have a look at and that actually outperformed the money supply over time? I'm very curious. If you liked the video, please leave a like and subscribe, and see you next time. Ciao.